One of the biggest bloodbaths in our economic landscape today has to be commercial real estate. We're going to talk about why, we're going to talk about what opportunities are there, and just how this could be affecting all of us overall that live in these major metropolitan cities where commercial real estate is typically taking the biggest beating. We're going to cover all of that in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So, amongst the really rough landscape of several different investment markets all around the economy, commercial real estate is taking an absolute thrashing right now. And I'm talking office buildings, multifamilies at risk. Almost the majority of the commercial real estate sector, with the minor exception of maybe mobile home parks and areas like that, storage units, I'm sure they're holding up okay in these economic times. But when you start talking about anything office related, commercial spaces for businesses, and when you start talking about multifamily, those areas are either in serious, jeopardy, or they're outright getting decimated in this economy right now. We'll back up a little bit to give some context to this, because prior to the health crisis in 2020, commercial real estate, depending on the sector, if you talk office spaces and major commercial buildings and skyscrapers, they kind of weren't doing that great in many markets before the health crisis, to be honest. If you look back at statistics, it was a little shaky at the time, but not knowing 2020 was coming, I don't think it rung many bells or set off many alarms. When 2020 did hit, and we had a situation where so many companies had to shut down, remote work was really, I don't want to say born, but really took off. And, you had so many scenarios where office spaces and these big skyscraper buildings that normally served a certain purpose in the marketplace lost their value instantly. And a lot of that hasn't recovered since 2020. Remote work and those who are allowed to, partially remote work have moved around a lot in the last 2 to 3 years and exercising that new level of freedom. Companies are also seeing some of the value, depending on the company and the industry, in this remote work movement, and also not jumping back into these office spaces and taking that tab on. So in that segment of the commercial real estate market, you have serious issues for a few reasons. Number one, occupancy. You have a scenario where, just as we broke down, the office space is just not what it used to be even 4 or 5 years ago. Interest rates are a big problem. Most commercial real estate is on short-term interest rates. There's not much commercial real estate, anything beyond 7, 10, or 15 years in most cases. So this is a problem as well, because the last 7, 10, and ultimately somewhat 15 years have been a very low interest rate environment. Especially the last 10 years for sure have been very low prime rates, thus very low interest rates. So with this being the case, these different commercial buildings, the loans on these commercial buildings are readjusting at higher interest rates. So the tab is bigger and the revenue is less. And the valuation to be able to sell these properties, of course, because commercial real estate is based off of its rent, its earnings, that changes the ball game. It's not like residential real estate was based on comparables. It's based off of the revenue it can generate. And a lot of these buildings are really hard to repurpose, especially these skyscrapers and things of this nature. They're not easy to repurpose. So it's not a lot of flexibility. So with that being laid out, let's talk multifamily, commercial multifamily, which, can be broken out as anything over 5 units, honestly, but we're going to think, larger scale, double, 20 plus, 50 plus, 100 plus units. When you start to get into this space, especially 100 plus we'll maybe stick to. This is where you start to have these major operators and, partner agreements that are, usually taking down these deals, and there's investors that are participating in it. These scenarios are really struggling, not as necessarily from an occupancy issue per se, but they're struggling from the interest rate market in particular. Again, most commercial real estate is short-term interest rates. So these people have taken down properties in the last 3, 5, 7 years on terms of 5, 7, and 10 years when interest rates were dirt cheap. We have a prime rate right now at about 5%. And that means that the commercial real estate loans are, significantly above that. When previously, when originally taking these buildings down, it might have been half the interest rate it is now. It's a big deal when you're talking about an operational cost that's not, strategized for. Nobody really could say that they knew this was coming 2 years ago, let alone 3, 5, or 7 years ago. So when you start thinking about that dynamic of it, that puts multifamily in a really tough spot, current owner operators, and they're not adjusting the price around the current market. They're holding on to this previous utopia of what their commercial properties used to be worth. And to be honest, it's making liquidation unrealistic, and interest rates are adjusting. So there's a massive increase in operational costs. Profits are down. So there's a strain on these operators to pay out investors properly. It's just a mess starting to take shape in the multifamily real estate market. When you also look at the dynamics of these office spaces going dry in major metropolitan cities, there's some really, really hallmark buildings in like New York and different parts of the country that are like extremely vacant and are going through fire sales and all kind of things that many people may not even know is happening. But these skyscrapers and major commercial buildings are struggling right now. And that is also creating a vacuum in the metropolitan areas, because as these remote workers are now able to move out to cheaper areas, as there's less of a demand for just overall foot traffic and, human interaction in the natural marketplace in these metropolitan city sitters, you now have a situation where the city itself is struggling, with tax revenue. The property valuations will eventually catch up to this in the residential spaces. Small businesses that are used to feeding off of these larger businesses and these deep, dense populations in the area, closing their doors. There's a major domino effect to all of this commercial real estate starting to take a hit like it's been doing. So if you're in the corner of the market as a residential homeowner somewhere in the vicinity of these major metropolitan areas, you could end up feeling the effects of this through either higher taxes, lower property values, or both. You could experience a scenario where there's just less job opportunities in the area, and so on and so forth. You have the other end of the stick where if you're a business owner and you're looking for commercial real estate to either lease out or buy, you could get a bargain right now, depending on where you are and what the circumstances are. There's opportunity for you to go in and negotiate on leases or negotiate prices and get a steal. And this could be an opportunity for you if you're on that side of the spectrum. So please keep that in mind. If you're a business owner that needs or can benefit from commercial space or office space, take a look for these things, look out for these things, because right now, a lot of commercial spaces are really struggling to keep occupancies at a reasonable rate, to keep not only the lights on, but to keep things profitable. So if you're a homeowner in the area, you may have to keep your eyes open for what effect this commercial real estate collapse could have on you. This crash could be a problem for you if you live in, anywhere in the general vicinity, and your home, your housing, and your residential property value, property taxes are dependent on the economy that this commercial real estate was harboring at one point in time. So keep your eyes open. If you're an investor or a newbie investor, or you're looking to invest, when you start talking about multifamily, or you're looking to maybe get into these general partnerships and put your money in and get some return and benefit from some of the ownership of real estate, then there could be some great opportunity, depending on where you are financially, to either take down some of these deals yourself if you're that big, that big of a fish, or if you're somebody who just has $50,000, $100,000, $200,000 in cash, and you're looking to put your money somewhere, you're going to have to do your homework on these operators that you may be partnering with and investing with. But there could be some new opportunities in commercial multifamily real estate from people who have positioned themselves properly and can now swoop in on these struggling operators who are eventually going to have to come to reality and sell these properties at a discount. So as you can see, this is a world of opportunity, and it's also a world of pain for those on the wrong end of the spectrum. So I want to bring this video to you to put a little clarity and context, just to open your eyes, because commercial real estate is not quite getting the hype that residential real estate, the stock market, and interest rates are getting. And commercial real estate, as you can see from what I've covered in this video, covers and touches and has tentacles on a lot of different parts of local economies around the country. So whether you're on the investor side, you're a business owner or a homeowner, you need to be savvy about what's going on with commercial real estate, especially if you're in one of these hot metropolitan markets that has been dependent and leaning on commercial real estate in a lot of different ways that you would have never thought about. That's all being shaken beneath your feet. Whether you're going to have to make adjustments to minimize losses and pain, or you're in position to capitalize on this opportunity, commercial real estate is going to be in a tough spot for the next couple years or few years. Last note that just came to mind before I let you go in this video, a lot of commercial real estate is funded by mid-sized and smaller banks. If the lending crisis, the tightening that has been discussed since these banking collapses have started to take place gets into gear, now you have a whole nother factor where commercial real estate may have a hard time financing. That's a whole nother deal, because what's commercial real estate? What's any real estate without proper financing? So that's a whole nother hit towards that market that could really punch on valuations and, people's ability to hold on to properties when it's time to refinance or get new financing for these properties. It's really rough out there in the commercial space. And then when it's rough, when it's bloody is when there's opportunity. So, I wanted to throw these ideas at you, throw this concept, throw these opportunities, throw these warning shots at you. I hope this was valuable for you. I enjoy bringing the content to you. Don't forget to like the video, subscribe to the channel. I'm putting this kind of content out on a daily basis to help you customize your blueprint for prosperity. This is JP. As always, I want you to stay focused, stay in motion. I'll see y'all soon.